So, hello, and massive hello to everybody. Hope everybody's having a great day. No trade calls, no recommendations of responsible owned stuff here for educational purpose only. So, it'd be good to if somebody could let me know how sound is, and we can start going through things and seeing if anything interesting is shaping up today. We'll go through the cash open. We'll see what gives. So, first of all, a little bit of a funky day. And we'll keep in mind, again, a lot of people might also decide not to trade today depending on their systems and how they're doing. So it could be a little bit funky, right? Focus is clearly going to be on the weekly closes. Right now, we've got very decent follow through from that weekly negative close on NASDAQ. ES is trying to close negative, and we see YM and RTY pulling back, exactly what we were looking for yesterday. So the nicest trades yesterday, we'd expect that, long ES or NASDAQ against a short YM or Russell, that spread, that pair of trades would pay on the day. And again, keep an eye on how we trade on gold here, as it looked like it was time to either take off longs or look for tactical shorts on gold, right? Now here, going into the cash open, keep in mind OPEX today. So as we know, there are a couple of those repeatable and very basic patterns, right? Those trades that we call very high odd trades, whether they're around the pivots, whether they're around the previous day range, and whether they're on a month end, quarter end, post that Powell press conference, or again into an OPEX day, right? And what we would always look to do, especially if something sets up tight, we would always want to buy a down market pre the cash open, looking for us to move to unchanged or an up open on OPEX Friday, right? And today we got one of the nicest trades because we got exactly that shaped up, and on top of it, that shaped up in a little bit of the usual fear and panic. I had some guys IMing me, telling me, are we going to get bank runs, yada 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 yada. Keep in mind, it's not like a terrorist attack or something. It's just like an interim messed up an update. And of course, right, there may be delays in UPS, Dell. It's a shit show at the airports, yada yada yada. But is that a reason to hate sell ES or NASDAQ? Absolutely not, right? So in these kind of things, you'd always expect market to go back to the scene of the crime, back to where it was before the panic headline hit, especially if it's not something very consequential. So here, what happened, you can see, especially with ES and NASDAQ, we're going back, we move back into this key level, right? You can look at it on a 15-minute chart, and we came right back into that. And the moment it starts holding, your risk is extremely tight. You start seeing these reversal candles, right? Your risk is extremely tight for a move back to sea of the crime, back to unchanged, and back into green opens into OPEX. And you saw a very similar action going through, especially on NASDAQ once again. Once you start seeing that grind higher, it's in play, right? Higher highs, higher lows. Who's going to want to short it in the hole going into the OPEX open? So that's clearly what's going on here. And now it will be game on into the open. You could see that once again, similar pattern, that YM and Russell heavier, but especially that YM, we got that very nice reversal. We talked about that failure at those highs on YM yesterday. If you remember, we said, this is setting up something very nice, right? Not on the sell here on the first move down. Why? Because the new ATH, the new all-time highs were set outside of the RTH session, right? And what we know it is unlikely for a good, strong, sustainable new swing high or new swing low to be set outside of the RTH session. So what would it be nice? We said, let's look at this. Let's see if it can print a new high in RTH and then fail for them from there. And that's exactly what you got, right? We came right back in to clip those stops above the all-time highs that were set in the overnight session into RTH, and then bam, we got the failure in the rotation. And why are these failures like this really nice? Because you can quickly get short with an extremely tight risk with stops above those highs. And you know that if you get traction, it's a great way to try and front run a negative daily close at all-time highs, right? So right here, a lot of people will be looking at this setup saying, okay, let me get short with stop about those all-time highs to see this come back all the way into the 10-day moving average, all the way back into these previous all-time highs. But the risk reward is not that great on a trade if you have to take it on the close, but it's very nice if you got it on the initial break with far tighter risk. You can be a lot more aggressive on those setups, okay? And especially after, you saw that outperformance, the Russell being up 12, 13% in a couple of days, right? Would it be crazy to see it pull back a little bit? Absolutely not. So those trades fairly interesting. And today it'll be interesting to see what kind of follow through we get. Also, if you're looking at RSP, we got that sharp break, but look at this. This could actually close negative on the week, right? Now, again, I think you're going to see a lot of chop inside this range. So it's much to do about nothing as long as we're here. And you could see a little bit of a pullback all the way back into the 10-day, back into this level. But, bulls shouldn't necessarily be worried unless we come back and trade outside of this zone, right? If you see this breakup, it should, if the move is for reals, this should hold. Any pullback here to break out. If that breaks, then that opens up a quick flush back into the 200 DMA, back into those levels, and that's what I would be focused on. But the unwind in tech is the clearest trade, as we've been talking about for ages. And you can see that once we lost those key levels, there's no real turning back. Apple. Sorry, that's AMD. Apple. What did we say? Once you get this reversal pattern, right? Very rare for it not to tag the 10-day and very rare for it not to get follow through. So here, what you want to watch today, and especially into earnings, right? The base case is still that even if earnings are good, you'll probably continue to get sales, and that's what's going to be very interesting, right? Especially if the earnings are good. It's not so much how we open, it is how we trade, right? And keep in mind that next week we've got, a lot of more tech earnings. We've got that core PCE print. We've got the, I think it's all the PMIs. We got the GDP, which should come in hot. So it's going to be very interesting to see how we trade. But unless post earnings, this can get all the way back above the 10-day moving average and actually close below there. Any sale into this area means that we've still got a lot more downside to go back down into that 200 mark. And, Amazon, this is not a good look, right? You've got this previous level that's broken, and this could be a false break. So the bulls really have to come in and hold this. If not, once again, across the board, this opens up a move back into the 200 DMA, back to fill this gap. Google, very similar, right? This was the breakup zone. This could be a false break. This is what you want to watch going into the week and into earnings. This needs to hold. If it doesn't hold this pivotal level, then once again, we've got these gap fills and the 200 DMA coming into play. Microsoft, similar. You see how it's a similar pattern across the board? We got this previous area. That's what it's trying to hold. If it breaks 200 DMA, gap fills, that's what's going to come into play, and so on and so on. So that's clearly what you want to keep an eye out for. But it's very telling that yesterday, TSM, it couldn't hold that bid, right? So again, interesting to see. We have to be patient going into the open, but clearly the unwind in tech continues. So what am I going to be looking at going into today? Well, keep in mind that, as always, going into the open, the overnight range is extremely important. And keep in mind that there's likely a lot of people that were already short probably tried to continue to get short into the hole today because the world was going to end right on this outage. So they're probably an awful lot of stops layered above these overnight highs. And also, don't forget that it's, Free Money Friday. So Friday also tends to be a trend day. It's not uncommon to see a trend day develop. So I think that's really what you want to focus on. I'm not that interested in YM and Russell today, but the same principles apply. But I think here what I would be focusing on, again, is this NASDAQ and ES, right? An opportunity to see that ON high get taken out and get a little bit of squeeze action going. Now, clearly, if you're already long from that on the lows this morning for the green open into OPEX, which is extremely high odds play, you're trying to hold partial to see if you got yourself a runner. Here, if you're flat, it's a little bit tricky, right? If you're flat, because you want to see how we trade through the open. You don't want to get caught off guard. And clearly anything inside this range is going to be extremely choppy. I'd consider this is, the neutral amber kind of zone, very messy. Now, clearly on a break below, you're going to want to try and play for a trend day lower, and a break above, you want to try and play for some kind of a trend break higher, or at least a quick bop back into yesterday's highs. Now, in terms of the bigger scheme of things, keep in mind that there's plenty of room to the downside still into that weekly S3 on ES. We have that DR3 is pretty much in line with that 54.71. That's where the old contract settled. So we fully expect that to get tagged, before this contract settles, the current contract settles. The big question is, how does that happen? I think more of a textbook play, more of an orderly play would be to see a little bit of a pause, maybe some kind of rally attempts, especially into earnings and stuff like that. But then it gets those rallies get sold, and we ultimately tag that. And if we start to get, famous last words, but if we start to rally and get bid again for the end of the year, it will happen later on the summer. Again, it's been a strange market, so really hard to tell. So as I've been saying, I would be not too focused on trying to pick trades here in terms of election trades, or trying to pick big swings that I'm trying to hold until the end of the year. I'd be far more focused on trading tactically inside the ranges from an intraday perspective. Now, keep in mind that finally yesterday we saw some really decent volume coming in. So stuff is very tradable. You really don't need to take lotto trades or big bets here. There are a lot of trades intraday, and as we've been seeing these last 2 weeks, a lot of tight opportunities. So I think nobody can complain, especially if you have the opportunity to trade intraday and spend most of the session in front of the screens, or at least the first part of the US session in front of the screens. I think the other thing to keep in mind here is that there'll be a lot of wheeling and dealing on the dollar in general. And I think it's really hard to pick a side on the bonds, because as much as they look like they want to rotate higher, they're really having trouble at those highs. And all it's going to take is one semi-hot data points, and they could get smashed. And it's the same thing why this rotation into YM and Russell. Remember what we talked about. If you're trying to trade the data points, probably the best bang for your buck is, weaker or higher inflation prints to play for that Russell to be up or down 2-3% on the day, because that's what's going to be reacting the most to it. But remember, there's still a lot of shit goes there, right? So all it's going to take is one hotter print, and people might need to unwind that quick. So I don't think it's worth trying to play huge long-term plays here. I think there's just plenty of opportunity, especially if the volume coming back in, to trade intraday, and especially going into the bulk of the earnings season, right? Going back into that bulk of the earnings season, why make it harder than it should be, right? Again, if there's any chart anybody wants me to review, let me know. Here, another thing that I would be paying attention to going into the day here, you've got this CAD coming into this previous highs and a weekly R3. So all things being equal, you wouldn't necessarily be looking to really press the long side here. If anything, you'd be looking to try and scale out of some shorts and look for longs and look for some tactical shorts. But, again, also you've got gold coming back into this previous high, which is in line with this hold for the rip higher. It's a DS3. So normally, vast majority of the time we should close above or around this area. You wouldn't be looking for aggressive acceleration here, right? So if you're seeing this dollar bid here, a dollar bid here, and they're approaching extremes, what would that lead you to think? Well, maybe there's just not an awful lot of dollar upside today, or it should be maybe a little bit muted, so sideways to down maybe for the dollar for the rest of the day, and or at least of some of the stuff. So that should be a little bit supportive to stocks. Again, we'll have to see. It's still fairly early, but the opening flows are going to be very interesting. If you're trading this morning, you probably want to buy some Microsoft on that dip. Again, as I said, buy ES, buy NASDAQ, because it's nothing crazy, right? I don't want to be long tech in general here. I prefer those long trades on the ES, but it's very, very similar trade. Yeah, here Euro is kind of hovering here, right? It's still stuck in this broader range. And ultimately, if you think about it, right, unless we have a clearer picture from the ECB or from the Fed, does it really make sense for it to aggressively break out of this range? So the ECB looks like, at least now, they're in no hurry to be cutting every meeting. The Fed, we're still not sure what they're going to do. So, would it be surprising to see more chop unless we get something hit the wires in terms of geopolitical, something from the central banks, some strong data point? Probably not, right? Here on the week, we're kind of hovering above that, below that 110 and above that 108, it's 109-ish, fairly neutral. I think it's a little bit of a snooze, Jason, right? It's a little bit of a snooze. From the daily, could you argue that because you'd expect this to stay in some kind of a broader range, you'd be looking for some kind of short trades here for a little bit of a return into the 108? You could, but again, I would much prefer similar trade, much prefer to have been short gold on this double failure here, on this negative close 2 days ago, which was a pure reversal at new all-time highs, far better trade, and a very similar trade, right? So similar on Aussie, what's happening on Aussie? It's kind of stalling here. You already had a little bit of a failure here, but it wasn't a pure pattern, but similar way to play for this to come back into a little bit more neutral-ish zone, the same way as we discussed on Euro, is to have been short that gold on that daily reversal. And again, if these have a little bit more legs, well, gold should have a little bit more legs. And as you can see, gold is also trying to set up a negative reversal on the weekly. So here, again, you're likely going to see a lot of wheeling and dealing, but this kind of area is very choppy, so it's hard to read too much into it as long as we're stuck inside of this range. But clearly, you don't necessarily want to be buying the highs here, right? Also, if you think about what happened today, it's probably like a gold bug's dream, and gold isn't really rallying on that, right? So it's not particularly good. So I would expect gold to maybe, come back and settle inside this zone. Maybe we need to get through earnings. Maybe, again, we have to get through some other catalyst and see what happens. But it's a very similar trade to the short euro or short Aussie for a move back into a little bit more neutral, but with far nicer location, far nicer trigger. Okay. Euro NZD. I mean, I don't know when the last time I looked at this, but let's see what's going on here. On the daily, looks like it's tried to break out of this area. It's stalling a little bit ahead, but still got a little bit of a bid. So what you would expect here, because it's not a clear trend line break, you see you've got this previous zone. So the way I would look at it is here it could set up some kind of false break, but this whole area would be very, very choppy. But if you get an impulsive move that closes back above here, you would expect this to try and come back all the way into these highs. That's a very similar pattern, even though it's a little bit messier, to what you saw on something like RSP, right? But you see, Jason, let me know if this makes sense, how pure this is. It's a very pure trend line. Bam, we break above, we don't look back, and we go back into the scene of the crime. If you look at YM, clear break. So that's a little bit messier, but that would be the kind of action I would be looking at. Again, I don't trade these, what I call these funky pairs. Some people call it exotic or whatever. I don't trade these, but that's the way I would be looking at it. So here, going into this open, it's going to be very interesting to see after the after opening flows what kind of action we get. It might be a little bit messy. I don't know. It seems like most this morning LSE and stuff like that had some issues, but it looks like some people were reporting, some JP Morgan traders were having trouble logging in, but I think everything's fine. I've been trading futures, no problem at all. None of my trading platforms have had any issues, so we'll have to see. So in my view, this supposed dollar weakness was just it's just still a follow-through reaction of that, the market having to price in that cut in September, right? Which the market is pretty much given for granted, right? So now I think that move has been priced in. The market has fully assimilated the fact that, that September's on the table. I haven't looked recently, but at a certain point, pretty much 100% priced in that Fed was going to cut in September. So I suspect what's far more interesting here on the dollar, what you want to look at, Jason, is going into next week, right? We've got apart from all those PMIs, we've got a Bank of Canada press, but what's focus is going to be Thursday and Friday, right? So advanced GDP and the core PCE. So those two data prints, right, apart from the earnings, but those two data prints have the possibility to completely confirm that September could be a done deal, confuse things a little bit, or completely take September off, right? So what that means is that double day, that Thursday or Friday, you have to be in front of your screens because you've got a lot of opportunity for some interesting trading, right? Keeping up numbers might come in. What if the numbers come in super hot or super weak? You got yourself, reversal or continuation of this move we've seen, so which is likely going to have some legs, especially if the numbers are really convincing one way or the other. So you definitely want to be around those 2 days. For now, I would argue that in terms of velocity of move, the velocity of move to price in that September cut has happened, And again, keep in mind today you could see some funky action into the open, some funky action into the close. You do not want to get stuck, with, offside, begging for a position to resolve for you in the last 15 minutes of the day, because chances are it could be disaster, right? It's not uncommon to see stupid double-digit handle moves. So you want to be a little bit careful. My base case assumption is still that focus on the overnight ranges to see what gives. I would, same as I was discussing yesterday, I would still expect ES and NASDAQ to outperform Russell and especially YM today. And, let's see what gives here. We got about 5 minutes into the cash open. We've got about 258,000 E-minis traded so far today. Nothing to write home about, but not as depressing as we've seen in the past weeks where we were struggling to get at 200. But again, if you look at also yesterday, finally, these past 2 days, we've got decent volume coming back in across the board. So that's clearly something to be happy about. And, we need volume to be able to trade, two-sided trading, get the tight trades so the setups are respected. Worst thing that can happen is, dead market with no volume. Yeah, here it looks like the MIM on the open is something like just slightly negative, nothing crazy. But what I'm far more interested here is going into the open is to see basically what we have is we've got a situation where, Facebook is green, Apple is green, Netflix is green, Google is green, and we just have Microsoft and Amazon, which are down in terms of the usual suspects. And then if you're looking at the chip names, you've got AMD, Intel, NVIDIA, all red. So what I want to see here through the open, especially after we get through the first 30 minutes or so of trade, do we see bids coming back into those chip names? Do we see stuff stabilizing, or do we see continued selling? We had a situation also yesterday where we had a lot of green, and then into the cash open, then bam, you saw everything got sold. If you for the guys who were in the webinar yesterday, we're looking at it and we're saying, man, look, there's an awful lot of green across the board. A lot of stuff up, 2-3% pre-market. So normally it would be strange. You would not expect everything to turn red, to have a down day. You would not expect the market to turn, especially if it could hold that green in the first 30 minutes of trade or so. And then we went through and, straight away after the open, bam, the selling came in. It just didn't stop all day. What is interesting is that it stopped at very clear levels. We talked about this breakup point, which was super important, and we came right back in. And you see right into that previous high coming in, it stalled. So this is a really big level, right? If the bulls can't hold this area today, then that really, and you start to see 15-minute, 1 hour closes below, that really opens up grind lower day, because who's going to want to fade it, right? Then maybe if it's a grind lower day, the first time you'd be looking to buy would be, closer to the end of day for maybe a little bit of a late day ramp. And also, if you look at the NASDAQ, we had this big, run on this break higher, which was defended on the first test. Then we had the higher low here, and then came right back into the scene of the crime, but then bam, bids coming in supporting, and that's what's being supported again today. So this is a really, really important level for ES and NASDAQ. So again, you'll see it. The bears are pressing. Likely with this kind of action, there's no need for the bears to cover yet, because you could see it's still under pressure. We're still below yesterday's lows. We're still inside the overnight range. So the bears have a chance to really put their foot down and press here. But the longer we go on in the day and we can't, then there's at that key support, there's a case to be made for a lot of covering, and we could see a little bit of a squeeze higher. Now, again, that squeeze higher doesn't have to be on any real aggressive buying. It could just be shorts covering, right? And a little bit, and some tactical buying, panicking on a squeeze on a Friday, going into the big tech earnings, which tend to be bullish, yada, yada, yada. And the bears might think, okay, well, as long as we're heavy here, I'm going to keep on pressing it. If we break down and we get a trend day lower, there's no reason for me to cover. I'm going to try and close it on the lows, try to get gap down open on Sunday, and I'll keep on at it. But if this can't break at this level on a Friday and it starts to grind higher, do I want to let this squeeze against me all day? Or do I just want to take my profits, let this squeeze, and pray it squeezes as high as it can so I can just get short again at a nicer level for post earnings, right? So let's see what gives here. So we've gone through the cash open, and you can see that the market is kind of hovering here. You've got all those chips are still red. You've seen a little bit of selling on some of the tech names that were green, but globally, not an awful lot going on. Some buying in YM, Russell heavy, and some selling on ES and NASDAQ. Again, you want to wait for the first 30 minutes to be done, or the first, those opening flows to get done, to see how this is going to settle. And the easiest way to look at this is, again, look at the overnight range. That's where the stops are, right? That's where the market can likely get Momo. So what has happened here? YM has has broken below. As long as it can hold below, the moment it can't, the path of least resistance will be and try and take stops out the opposite side of the overnight range. It's just going to be a ping pong as long as it holds inside the range. Ping pong to probe the extremes. And if it can hold outside, it will likely try and extend in the direction of the break. So you could see Euro and cable not really moving. The stuff that's broken free today is trying to extend. Very unlikely to people to really want to start to fade aggressive moves on a Friday. Maybe into Europe Open, maybe into the close, but we'll have to see. But you can see the stuff that's broken outside is trying to extend. Now here, notice on gold, going on a shorter time frame, even a 1 minute chart, all day, right? Grind lower. Did the covering of the bids come in the middle of nowhere, or did they come in at a very specific level? It's not rocket science. Previous resistance, support, key breakout level, confluence with daily S3, you would expect to see covering there, and some bids tactical lawns trying to come into the open, right? Now this is where the fight is going to be for the rest of the day, but clearly this could end down hard, but this is not a place where you would really be pressing shorts. If anything, you're covering shorts and looking for some kind of tactical long opportunity. But again, very technical here into this level. Yeah, so far we've got RTY and YM down 0.6%, ES and NASDAQ down about 0.15, something like that. So all things being equal, you're still seeing, as we said from yesterday, you'd expect that ES and NASDAQ to do better than YM and Russell. So no change here. This is exactly what you would be looking for. The other thing we're talking about also is, you've got this monthly R3 here on Russell. So it's going to struggle here. It's going to struggle. It'll have a tendency to want to be pinned around here and always try and come back towards this unless there's a big catalyst into the end of the month. But Hold on. So how's the end of the world trade going? I ammed a couple of you guys this morning, saying you buy it for gap fill. You don't sell it unless there's something huge structural, right? See, now all those guys who are hate selling it today, looking for the end of the world, bank runs, yada, 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 they're in trouble here. Now, it doesn't mean it can't go down again, because broadly speaking, we'd be bearish. Microsoft, we've been talking about how important this level is. But, into a Friday, gap down into a key level on one of those panic headlines, it's an extremely nice tactical buy opportunity. And again, you're not married to the position. You're just looking for that gap to fill. Then anything else is gravy or trade done, right? But especially also into OPEX, those are really, really, really nice opportunities. Yeah, well, equities don't normally get clobbered, but you tend to have more of a weaker period in August, September. But it's not like end of the world kind of stuff. Normally, on a non-pre-election year, Jason, all the indices on average through the month of August end up printing like down 1.5% for the month and tend to close flat. But actually, on a election year, the August is far more bullish. So just Google, seasonality, equity seasonality on election year. August is not that bad, right? It's not that bad. Probably one of the ways where less experienced traders have gotten in trouble is the sell in May go away, because they usually get clobbered, because in any way it's not really May, it's probably like end of June, July, because the first 2 weeks of July are the most bullish of the year. And then it's, you need a catalyst for an aggressive move. But just Google it, you'll see the seasonality, it's fairly clear. Crude is hovering here at this 80 mark. I think the message from yesterday from Trump was drill, baby, drill if he gets elected, so not surprising. But again, I still think there'll be a lot of chop here. Not an awful lot going on. This 80 mark is likely going to be pivotal. If you start to see closing below these previous lows, then it could easily try and come back towards the mid-70s. But, maybe it's comfortable here. I wouldn't be surprised if it's kind of stuck in this broader range. Everybody's still making plenty of money here, even if it trades a little bit lower. So, again, I don't think there's much to do there. You probably get in trouble on a lot of headlines, but so what's happening? So you're seeing two things which, all things being equal, you would expect is, in terms of extremes, right? As we said coming in, is you'd expect gold to stall here and talk about a pure reaction, right? Just exactly where you would expect it to come in. And CAD trying to get back below. You see you've got this previous high too. So this is an area, as I said before, you'd be looking to scale out of longs, possible tactical shorts if they set up, but not pressing the long side. Now you've got Facebook up 1.5%, Apple up almost 1%, Netflix up almost 2%, Google up over 1%, Microsoft trying to get back to unchanged, Amazon pretty much unchanged, just slightly down. All those chip names are still down. Intel's getting whacked, down 3.5%. But, nothing Nothing too crazy. Through the turn of the hour will be a little bit more interesting, about 372,000 E-minis. So it's not like we've got crazy. There's a lot of unchanged-ish on the screen today. Okay. So again, guys, any comments, any questions, let me know. If the action is dead, we'll call it a day. If stuff gets moving, we'll go on as long as stuff is moving, or at least into the next turn of the hour. So far, it's looking interesting. So, you know what we mentioned? This is an important thing to try and internalize here. We said coming into, and again, anything can happen, right? There's no certainty. We're just trying to look for patterns or trying to look at things that may give us a little bit of a clue. Now, by the way, ding, 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 Microsoft green for the day. I can't stress this enough. We've seen this so many times with so many things also happen while we were live in the sessions. And you know, if there is somebody who is very happy to short and lay into the short side, it's me, right? But you got to trade what action you've got in front of you, right? So coming into the day, we had a couple of things which were clear, right, or evident. One is that ES and NASDAQ were trying to hold this key level. And on the other hand, that gold had made it into this S3 and CAD was into this weekly R3-ish area, right? So all things being equal, we say, well, if we have to make a call here, it probably seems like the dollar is going to be sideways to up, or at least not necessarily accelerating down, right, aggressively today. And so that would probably mean, as we said before, it's an environment where that should help equities rally, right, or especially help ES and NASDAQ pop off that level, right? And you see this is what's trying to play out. And the other thing we said is focus on those ranges, right? So you see what's happened the first time we come into and try and flush, and we can't get anywhere close to the bottom end of the overnight range. Where's the pain trade? The pain trade is to take out the upside, right? Now, it doesn't mean we have to. We could easily fail here. And if we fail here hard, then the market's all going to try and take out the downside, because what do we say? It's ping pong around these overnight ranges until they break, and we can try and get a grind day. But look at the same thing on hey, Daniel, how's it going? Look at the, if you missed the beginning of the session, it's recorded. It'll be on the channel. We discussed some interesting things, by the way. So here you see this Russell coming back, and it's a clear attempt to flush the downside, and it can't. So what is the path of least resistance, as we said, is to try and come back up and flush the upside. But we need breaks and closes, 15-minute, 30-minute, 1-hour closes outside to try and get that grind to go. But the action is fairly clear so far. So now we're in a situation where the bulls are a little bit more or have a chance to gain back control, and the bears need to step into it. Now, at what point will we say the bulls have got a little bit more control is if they can take out the overnight highs, right? That means they need to keep this below, this back above. It likely means they're going to try and pop Aussie back inside previous day range, Kiwi back inside previous day range, Euro back inside, cable back inside, right? That's the action. But it's not a done deal, right? It's not a done deal. But you have to understand that that's where the fight is. And it's really a coin flip unless we break outside of the range, because it's very choppy inside that area. It's velocity of move inside range. Okay. Let's see if we get any traction. So we still have, see what's happening. That's what's likely happening here, right? On Microsoft, you've got that very nice gap fill play, and here you've got shorts defending, Tactical longs that were just playing for the gap fill, done, trade done, get out. And you're seeing a little bit of a stall, right? Now, what have we got here? Well, we got ourselves a little bit of a range for the rest of the day, right? The overnight panic low where the world is going to end. We're all going to have to, cross the oceans by boat, yada, yada, yada. And here we've got, a little bit of a gap fill where we closed yesterday. So likely here is don't get confused by velocity of move inside range. Outside, we can get some traction, right? So it's just a lot of these ranges set up here. We have to be patient. But again, you have to be also in a position to internalize and understand the difference between the different moves that are happening inside of different moves, right? You've got a weekly time frame, daily time frame, 4-hour time frame, 1-hour time frame, 15-minute time frame. There's got a lot of different moves happening inside of moves. So you have to make sure you're trading the chart and the setup you're basing your decisions on, and you're not getting mixed up like looking at thinking or deciding on a daily time frame, but trading the 15-minute or 1-minute action, right? Or 30-second candles, right? Or trying to trade 30-second candles with a daily view. So 14 minutes to the 10 a.m. turn. Let me double check. I think, do we have an FOMC speaker later on today? I can't remember. We might have some. Not that everybody's paying too much attention to them anymore. So 10:30. No, that's so at 10:40 Eastern, we've got William speaking, and then later on we've got Bostic speaking. I mean, it shouldn't be a big mover, but you never know what the market decides to do with that. Then next week's going to be interesting. We're starting on a Monday. We got existing home sales, Richmond manufacturing. Then on Wednesday, we've got all the PMIs, new home sales. It's going to be interesting. Thursday and Friday really are the key days, with the GDP, weekly jobs, durable goods. And then on Friday, we got that core PCE, University of Michigan. That's going to be interesting. I mean, we got that the G20 meetings too. I don't expect that to be too interesting, but I'm really focused on, as we discussed earlier in the webinar, the fact that we've got that, that big velocity, of readjustment on pricing in that September cut, and the first chance that we get something to change that or really confirm that is going to be with those Thursday, Friday data points. So that's what I would be focused on. Okay, let's see. Got about 430,000 E-minis traded here. Market still doesn't know what it wants to do. You see how we're stuck. All the chips are still red. Facebook green, Apple green, Netflix green, Alphabet green. Microsoft's turned back red. And that's the problem here. You have to accept that it's a little bit of a waiting game. I mean, yesterday yesterday, first 15 minutes of trade on ES, we had like 97,000 E-minis traded. Today we got 127,000. So better than yesterday, but we're still stuck in that range, right? So unless we get a breakout of that range, that overnight range is likely going to be slow chop. Maybe it's going to hang around until the turn of the hour and then try and break. Recently, what we've been saying is those breaks are being, on a couple of days, they've been later, closer to that 11 a.m. turn. Maybe we'll have to wait for Europe to go home for the week. What's Europe doing today? I haven't even checked. I really don't usually look at Europe. Yeah, still heavy, hovering at those lows, but no damage. Looks like, you've got Germany and Euro stocks trying to base here. By the way, another chart we've been stalking and looking at is the Nikkei monthly, right? And you could see here, this is really starting to smell like that false break here. And you can see the weekly here is fairly ugly. It's still very early, but look at the monthly chart. Now, it would be fairly rare to see this close negative on the month. Again, miles away and not see follow through. But equally, here this is looking a little bit heavy. So it's definitely something I'm keeping an eye out for. Biden absolutely staying in the 2024 U.S. presidential race. So does that mean he's bowing out on tomorrow? I don't know. We'll have to see. At this point, it seems like the headlines are still preparing us for him to bow out. Stranger things have happened, but as I was discussing yesterday, I would not expect him to still be in and do that next debate with Trump in September. But let's see. I mean, anything could happen from here till September. It's ages ago. Who knows what could happen? Does anybody have any other chart or anything they're looking at? Anything they want me to discuss while we see if anything happens into the 10 a.m. turn? Yeah, remember also that ramp in, we discussed that also, that ramp in YM was just pretty much a UNH and stuff. So once it breaks and that doesn't keep on going up Cocaine Angel, you usually get very, very quick unwinds. It's really classical in Russell and YM. So what are my thoughts on BTC? Well, I mean, what the chart is telling us is that it's kind of stalling at this previous high. And as much as the volumes aren't crazy, it kind of seems to be fairly comfortable here, right? So I don't know. It seems that there's a lot of speculation going on if it's because, German government, Mt. Gox stuff we're liquidating, yada, yada, yada. I don't know. To me, it's very hard to get excited one way or the other, especially to the long side, unless we break out those highs. But it does seem that the dips still have buyers. So I think as long as it's pinned around the 65, it's not that interesting, especially in terms of a longer term perspective to open up new trades. It's not expensive enough to short, and it's not cheap enough to buy, Jason, right? Now, intraday, clearly there are trading opportunities, but, with the VIX back in the high teens, and the moves and the volume we've been seeing on equities, I see no reason to want to trade BTC intraday when I can trade ES or NASDAQ or YM, right? Yen, we haven't done yen. I don't think much has changed since I did even the last free live stream on yen. We'll have to see here what happens with the BOJ. We've had a situation where we were very, very bullish. And once we got that break, it was the first time, especially on the intervention, it was the first time where it made sense to try and be short again. This could be one of the Trump trades too. He's being very vocal about this. I think what you really want to watch is this kind of whole zone, especially going through into the BOJ. As long as this zone remains offered, and you can also use, the confluence here of this previous high, the 10-day moving average, the 50-day moving average, as long as this can cap, my base case assumption would be that 152 attracts, just technically. And then, of course, if the BOJ does something, then you can be talking about 1/3, whatever, right? But right now, technically, I would say below this area, 152 attracts. Above, you have the risk of just another squeeze. And remember, on the squeezes, the problem is if they're slow grinds, you're probably not going to see aggressive verbal or intervention. If they're unorderly to the upside, then it makes more sense to try and get interested in the short side too. But here, I think that this is the way I would be looking, or I'm looking at yen here. I actually have a lottery ticket kind of short in play here. Full disclosure, but let's see what gives. So anything could happen, but it's always important to look at context, right? And try and make the best possible judgment in terms of having realistic expectations on what should happen the majority of the time, especially in high liquidity times. So as we said, we expected to see the bounce in gold. We expected CAD to come back below that weekly R3, right? We expected ES and NASDAQ to do better than YM and Russell, especially YM. Here you've got YM down 0.5%. Everything else is green. So again, it's just a question of trying to have realistic expectations of what could happen. So for the rest of the day, I would say the real opportunity is likely, unless you did something on gold or CAD, the real opportunities are going to be around that overnight range, as we discussed at the beginning of the webinar on equities. And if we break outside, then that opens a little bit of a grind day also into an OPEX day, which you don't necessarily want to fade. Okay? So, ladies and gentlemen, thank you so much for hanging around. I hope this was useful. We had our daily webinar system, which was down, so I know also a lot of people couldn't even had their PCs down, so we'll be watching the recording. So decided to do it here through the live stream. If you enjoyed it, don't hesitate to like or share. And wish everybody a fantastic, hey man, how's it going? Hope the holidays are doing fine. Wishing everybody a fantastic rest of the day and an even better weekend ahead. And again, keep in mind that should be a lot of opportunity going forward, especially in the next 2 weeks. See you back in October. Recording will be up on YouTube and on the blog in a second. I hope you have a fantastic holiday. Miss you in the room, man. Take care. All the best. Bye-bye, guys. Take care.